Good afternoon, traders, and welcome back to the Hot Stocks Outlook for September 7th, 2018. Hope you all are having an excellent week in the financial markets, and as always, plenty to cover in this week's Outlook. We're going to start here with Garmin. We've got Teledyne Technologies, TJ Maxx, some retail there, O'Reilly Automotive, and also Incyte. But let's go ahead and start here with Garmin, and very important to understand all these charts that we look at. All of these indicators that you see against the price data here all work off of end of day data. So these are individual daily bars and candles. And against that, you see you have a black line, a blue line. At the bottom, we have a green and red configuration. And you also see what is a predicted candle towards the right hand side of the chart. Now, every single day, you're presented with this predictive information. So all of these indicators are really looking forward and trying to look at, okay, well, what are average prices in the future? Should there be some short-term strength or weakness? And what is the predicted range, the predicted high and predicted low for the next trading day? So let me show you how this all works. Now, here in Garmin, you see against those daily bars, there's a black line there and there's a blue line. Now, the black line that you see on the chart, that is what's called an actual or simple moving average, one of the most basic common technical indicators you're going to find. But one of the weaknesses, and it's a significant weakness, is that it's completely based in past prices. So it only looks at what happened already in Garmin and then updates according to what that previous data happened to be. Additionally, it only looks at Garmin. It doesn't understand how the S&P 500 or the dollar index or other related or competing stocks are affecting and influencing the price of Garmin shares. ETFs, an extremely important group that trades in the market and has effect on a lot of individual equities. Well, in addition to that black line, though, you see that there's also a blue line. Now, this blue line is what's called a predicted moving average, and it's actually generated via the artificial intelligence technology found within VantagePoint. So what it's able to do is generate where prices are expected to move going forward by looking at those very important intermarket relationships. So for that value to be plotted at all, it's doing a lot of sophisticated analysis and again, looking forward. So it's trying to say, okay, where are prices expected to go in the future? In addition to that predicted moving average, you see you also have this green and red at the bottom of the chart. Now, this is what's called the predicted neural index, and it's another indicator that uses that artificial intelligence, but it's only looking ahead 48 hours, and it's only looking at short-term strength or weakness, whereas our predicted moving average is really letting us know what is the overall trend in the market. So you see here the neural index goes down to a red configuration. We're not, in that strong of an uptrend that we had here. We run sideways for a little bit, but the trend is still very much to the upside. And really lastly, to round out all of these forecasts, and they work the same regardless of which markets you're trading, but you also get a predicted high and a predicted low for every trading day before the trading day occurs. So you really have all of the information you need as a technical trader and how to get into a market, limit your risk, and execute your trading style. So you know the direction of the market, short-term strength or weakness, but also predicted high, a range of where you should expect volatility and pricing. So if we go ahead and say Garmin, okay, well, we've gotten this crossover to the upside, neural index up at a 1 confirming, you see a lot of separation saying the predicted average is well above where prices have been in the past. Prices are expected to trend higher. And then lastly, you bring in that predicted high and low range to help you manage the opportunity as the market trades forward. So, a short-term trader here says, okay, well, trend is up, maybe I'm a buyer here at this predicted low, targeting some targets, a couple, percentage points higher, however your trading strategy works, but understanding, okay, well, you're targeting the upside, the trend is up. Possibly buying some here, you see maybe taking some profit here, maybe buying some more down here, but you're not chasing the market. You have all of these levels ahead of time and you see what happens. The market, opens up, maybe trades a little higher, trades a little lower, but closes right in the middle of that range. Next day, moves lower, closes a little bit above that range, but you want to be long in this market as we see, well, what's going to happen? Well, the trend is up. And sometimes when these things really explode, you got to get those positions on ahead of time. So we see here in Garmin, really nice opportunity to the upside. But, I stress this over and over. It's really about managing the opportunity through time. So you see here, we've got a 6% move to the upside just in the past 12 trading days. But again, it's those predicted highs and lows to help you manage the opportunity. So maybe you make some money over this period. Maybe you buy some more back here. Maybe you buy some here, make some money over that period. But the point is, use these tools to guide you and be very efficient by utilizing technology to really help you get an edge in the markets here. So let's move on to more of these opportunities so you can really understand how this works. Here we've got Teledyne Technologies. So again, regardless of the market you're trading, you're going to use the software the same way. But remember, this is where the crossover starts. This is where it says, okay, go ahead, start taking your long positions. Again, if you're a long-term trend trader, maybe just looking for that crossover to hold as long as that blue line remains above the black line. But what you should really do is adjust the position over time. So use those predicted ranges, use the neural index to help you know when there's short-term strength or weakness in the market. But what I want to stress here is, the forecast here obviously is much different than the forecast back here. I mean, you're a month forward through time, and the software is still going to update and adapt to keep you on the right side of these trades. And again, manage that position very effectively, make the right decision. So obviously the trend is to the upside, but look at all these predicted lows. So you get a little volatility here, but these lows adapt very well and have you being a buyer. And you see how many times the market moves towards those predicted lows and closes above it. And the last thing you'd want to be doing in this situation is being a seller in the market. Blue line still very much above the black line, predicted trading range moving higher. And again, you can use these forecasts to adjust your position over time, because when you get into a position, things may change. You want to take some of those profits and use them to, again, buy back into the market. Use those profits to make even more money to the upside. So about a 20% move to the upside here in Teledyne. But this is an area where very clearly for the past several months, if you're a day trader, short-term trader, buying at those predicted lows, shooting towards those profit targets, and things just keep going higher and higher there. Let's move on to TJ Maxx here. So, in the retail space, we've got a couple of tech companies here. Moving on to retail here, TJX. So crossover to the upside, you see a lot of strength from the neural index. But again, I just want to stress, it's how these tools adapt. So even when volatility or unexpected things in the market, you got to get back on your game and you got to adjust to those movements in the market. And that's really what VantagePoint is all about. When things start to get volatile, you need a tool that's going to say, okay, well, here's how you need to manage this opportunity. Here's how you need to adjust to minimize your risk and maximize that upside. So you see over the past early month here, it says, look, in August, you want to be long TJ Maxx Corporation. We go ahead and bring up those predicted highs and lows. And again, you see how this works. You don't really need to be buying on this day and this day when, hey, predicted low right here, get that good entry, ride that trend higher. So you hit this level here, 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 come down lower here, 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 here. I mean, multiple trades where you see, every once in a while, yeah, you get a down day, a little bit of volatility, but the trend is to the upside. It's saying, look, hold the position. And then you've got 7 or 8, 9 different trades behind it where you're adding at almost perfect levels, getting involved, shooting to the upside, and really capturing more and more of this move. So far, just over the month of August here, TJ Maxx up 14%. And you see very clearly, look, you get this neural index, goes red, a little bit of volatility, a little bit of weakness. That's where you came a little bit below the predicted low. But the trend is still very much to the upside. So you're not shorting here. Things straighten up as far as your short-term and trend strength. And then you're bouncing higher and really capturing a really nice move. You see another about $6 to the upside there in shares of TJX. Moving on to O'Reilly. And again, you see sometimes these markets, they trend and trend and trend. You don't want to be, hitting your first profit target, getting out of the market, and then not have a new trade, not have a way to get back into the market and keep exploiting that opportunity. So you see a really nice trend here in O'Reilly, crossover to the upside as far as the predicted moving average. But again, I want to bring up those predicted highs and lows, which again, you have these levels before every single trading day. So you have that predicted high and low to guide you and help you know, okay, well, if I want to be a buyer, if I want to execute my strategy efficiently, where should I be looking to pick up shares, in this case of O'Reilly? And you see, regardless of how accurate the forecast is on the crossover back here, it's really about it remaining accurate with these predicted highs and lows in neural index. So you keep buying at these levels and understanding that, okay, well, short-term traders, buy at those predicted lows, set your profit targets a little higher, probably at the predicted high would be a good place to go, and take that little piece out of the range. But you can also have a trend trade on where you've gone ahead and taken your position at 284, market's up at 338, 340 essentially, and you can do a little bit of both. But, it was extremely helpful in markets to adjust your position over time, because again, you may get into an opportunity, but things change. And that's where VantagePoint's going to update your predicted highs and lows, let you know when there's some weakness in the market. You see your neural index goes sideways or goes negative there, and you see the trend really fizzles out, right? but the trend is still up. And as a trend trader, you still want to be involved because there's still some more upside there. So if the blue line crosses below the black line, sure, go ahead, take your profits, get out of the position, but you don't want to be jumping out of markets too soon. It really is about holding on to those winners when things are working and adjusting and really rolling your profits into these positions so you can really make the most of these things. Lastly here, Incyte. Same thing. So just like these other opportunities, doesn't matter if you're trading, the S&P 500, the SPY, if you're trading, Monsanto, Apple stock, it doesn't matter. It's all going to work the same way. And understanding that, okay, well, you got to identify the overall trend direction. Do you want to be long or short? Short term, is there strength or weakness in the market? And then, okay, where should volatility take us? Where should those expectations be for your trading style? And again, I sort of harp on these things where, you have these predicted lows, but they adapt. So, you can come in and buy on those days, sure. But you see here, you hit this predicted low here. A couple of really kind of small range days, hit that predicted low there. Great area to take a position. Same thing here. Hit the predicted low, predicted low, predicted low. You want to know intraday what's a good level. Am I on the right side of the trend? And also, should I expect some strength or weakness in the market? So, I'm not getting slammed in the face by these things. You're not getting caught by surprise. You really know what to expect over the course of these sort of market moves. So you see, just like TJX, up about 14% in a very short period of time, just 16 trading days, $9 per share. So really great opportunities all throughout the market. But as volatility comes in and some things are going to be moving up, some things are going to be lower, you got to adjust. And that's really where VantagePoint comes in and gives you a huge edge in adjusting those positions and adapting to changing market conditions. Because the trade you got in 3 weeks ago, things may change 3 weeks, 4 weeks down the road when you're in a position. So as always, guys, this has been our Hot Stocks Outlook for September 7th, 2018. Thank you all for watching. Best of luck to the traders out there in the markets, and bye for now.